require W-2s, 1099s, tax returns, none of that. If anything, it's just the minor details. It's just for location is everything, obviously.
Right.
And so we always want to make sure that the client knows that, the property might be inexpensive, but the rents might not be enough to cover its own. So we have to be careful on that, right? So it's just things that we guide. And so this is where realtors come in and help out a lot with that. But they always tend to do a good job anyway, the people I work with. So
That's good. So then they don't have to worry about, providing the income. They do have to come up with the payment, right?
well,
What would be kind of the terms? Like,
sure.
international
So
people.
they're all 30-year loans. They're investor loans, basically. They don't require Social Security. They don't require ITIN. If anything,
So
it's credit-wise. I mean, they'll base it off of 680 if you have no credit, because obviously you don't have an ITIN or a social at that. So
like 680 will be the base.
680, they'll base it
score?
off of that, and then that's what they'll give you the rate based on that.
Oh, okay. So that kind of is the worst case scenario.
That's like worst case scenario.
Okay.
So
Like on the
it's
credit
still
score.
best case scenario in most cases.
So they don't have to worry too much about the credit because first they don't live here, so they kind of
Right. So
get
we're not
that.
even dealing with credit at that point.
Okay, so we'll be kind of on the property's rental income. It will be based on location, and you will advise they will get approved.
Well,
Or if the property is...
we pre-approve them based on, we'll take the location, we'll determine what the taxes look like, what the insurance would look like, and what the mortgage payment would look like based on the term, which is the rate, and then the term, and then of course, are we looking for a 15-year, 30-year, just really kind of like what's up the client's really looking forward to, willing to go. But obviously, the home has to qualify itself. So what an appraisal would do is give you two things. It's called a 1004 and a 1007. 1004 is basically what the value is of the house. The 1007 gives you what the rent comps are. So
appraisal report will have that.
exactly. So you get both in one from the appraiser, and that's where we start determining, okay, what's your monthly payment on the mortgage, and then what's the rent comps for that property at that time.
So then they can the return right away.
But then you'll know if you qualify for that house in particular.